What is up, everybody? Logan here again with another video coming right at you. We're going to do some technical analysis today on the markets because we're at some pretty solid and cool crossroads with the market. Now, granted, Facebook decided to miss its revenue. Now, I'm not very surprised because they missed revenue last quarter too, right? And with them reshifting their business model and what they're going to do, as you can see, the earnings projected was 3.78 and they came out at 3.67, and the stock is absolutely cratering after hours right now. I think it's down like 25% right now. That might be a little bit of an overreaction. Now 22.5%. So it's cratering the markets a little bit in the after hours. Stocks like Amazon are following suit. So yeah, I just wanted to highlight that really quickly. But if you guys did see, Facebook down 18% almost immediately. And this was kind of expected, but it also says that they blamed inflation and supply chain issues for impacting advertisers' budgets, which I could totally see. So if it's only getting worse, and especially with all the craziness we've seen in the markets through January, I'm not super surprised with this. But Google did kill it, which was great. Pushed tech up a bunch, and now here is Meta, or Facebook, as some people still call it. I know it's Meta now, but FB is still the ticker. So it's really interesting. I'm curious to see how the rest of the market reacts throughout the morning because, this could just be an immediate reaction, just an initial reaction, it's a pretty hefty one. And they, PayPal did the same thing yesterday. PayPal, if we go to PayPal really quickly, which is very interesting to see these stocks just get absolutely destroyed. We're back to like pre-pandemic levels. PayPal is down 25% today. If I zoom out here, I know we had a squeeze and it fired short. Boom. Just getting absolutely clobbered though. Like this is the high before the pandemic. It's basically right where we are now. So everything is just getting killed when it comes to any sort of growth tech. PayPal, I know they had a little earnings issue and with guidance as well, but let's hop into the S&P 500. Now I have these arrows that I drew on my charts earlier when I was talking to the Discord. As you guys can see here, I was just showing the momentum shift lately in the markets, and with Meta's earnings, this could definitely change that whole perspective. But if we do zoom in, which I'm going to keep this cell, but if we do zoom in here, TTM squeeze is heading back towards the green line, which is what you want in a bullish market, or basically that's what the market tries to do. Like you'll see the price action always drift towards this green line for a while. And anytime we're kind of at this like crossroads, we consolidate, right? Just like back here, consolidation here, right? And that lines up with these green dots. And then we run up, we sell off, we sell way off, and then eventually the momentum comes back. So 4 green days in a row, pretty nice too. Like these were not just small 0.2% green days. These were all pretty much 1% at the least. Friday's low, basically from Friday's low to now Wednesday. That is a rip. 42.80 all the way to 40. I think we got up to 45.95 today is the high. It might have hit 4600 when I wasn't watching, but we do see some really nice movement here, which is on the daily chart. The RSI is finally poking green again. We have not had that. The last time was January 11th. And we were underneath the moving averages then. We were back above them now currently, so that's a good sign. And then, of course, we have this TTM squeeze working with us pretty well too. Nothing like a squeeze firing, but the momentum is currently shifting towards the green line. So would I be surprised if we don't have a pullback? I would be, like just a tiny one, like just to get geared up to make more runs. But I do think we will head back to the 4650, 4700 area. It's going to be kind of hard to tell where we're going to go from there because that'll most likely line up with interest rates rising fairly soon in March. And then also with earnings, right? Earnings are wrapping up. Amazon comes out tomorrow after hours. And if their earning report reacts the same way that Facebook is right now, or Meta, right? That would not be a good sign for the markets. So that's one thing we have to really take into consideration as we wrap up earnings season. But if Facebook's just a little overreaction, then boom, I think the market can continue to head upwards and everything looks good technically from where we are right here above all the moving averages. Now let's check the Dow Jones real quick. I like to do DIA for this one. The Dow is pretty much in that same spot. It has been poking green in the RSI for a couple days now, but they are also back above the moving averages. And even if we take a look at the shorter term time frames, as I zoom out here, we are getting a little nosebleedy, but the 1 hour 90 day is right back to the mean. And that's where I like to see stocks trade, is right at that mean on the 1 hour chart. So we could see 365. And I wouldn't be surprised if we do sooner than later as these charts catch up, but we are looking a lot better. This is like one of my favorite setups to take, is when we have been beneath the moving averages. It's a low risk, high reward setup here on these time frames, because even though we do have the TTM squeeze pushing blue on the 4 hour chart on the Dow, it's just a really nice setup being back above the moving averages. We should continue to drift. Anytime we make a move through these, that's always a really good sign for the markets in general. So something to keep into consideration, I would say, right there. So that's for sure something super important. So then we can take a look at IWM. So we got the small caps here, of course. They're squeezing on a couple shorter time frames, so that could mean we can get a pretty drastic price movement from them. They still don't look very healthy, though. Out of everything, I would say IWM looks the weakest, although right here we do have the RSI trying to get back to the 50, right? Getting right back to 50 on the RSI line, and then, or RSI reading. And then we have the TTM squeeze back to the green line. It looks like it wants to try to get there, but I think it's going to take a little while for IWM to get there. I know it's been getting beaten up the most lately. It was testing the 21-day, can't break through it, but I would like to see this guy push back to the 89-day if it could, around 217. So there's IWM, do a little technical analysis there. Then we can run QQQ, so we can check out how tech's doing. And tech has definitely been the healthiest mover as of lately, with two very large days, Friday and Monday. I think Monday we were up 2.8% on triple Qs. And then today was a pretty decent green day, up 0.8% thanks to Google's good earnings. But I do think the meta news, as you can see, we're down to 362 after hours, and we were 368. So that's about a 1.5% move to the downside today. So really interesting to see. So we'll see how we continue to react off that earnings there, but the Qs still have some ways to go. The 89 days at 377. So we'd really need to see a break above that. We were able to close above the 21, but we're right back under it after hours. We have that same thing SPX had going, which is this trying to poke green on the RSI, basically where we spent a lot of last year, right, was in this green zone on the RSI, and the TTM squeeze is aggressively sloping back to the green line as well. So I do not expect anything too crazy to happen. Now, granted, earnings could get worse, like I said, if Amazon reports bad. But Google, very good report. A lot of other stocks are doing well off this news, but not the Facebook news, of course. The Dow is actually up after hours, so I bet there's some good earnings in a couple Dow holdings. I'm not 100% sure what else had earnings. I just know Facebook was the big one to watch, because you guys know I'm a big tech trader. And, Square continues to get hit. PayPal does. But yeah, Amazon's currently down about 3% after hours off the Facebook reaction. And then Facebook is currently down 23%. So, of course, this initial reaction, any of this can shift at any moment. But it's definitely something to keep in mind, of course. Then we can take a look at, since we looked at the Qs already, we took a look at IWM, we looked at the Dow, we looked at SPX already. There's a couple other things I've been watching, and that would be energy. So I like to watch ERX, which is a 2X. Energy to me is a little bit extended. It's very strong right now, but we have to pay attention to where it is on the daily chart, and it is up in the nosebleeds. Great accumulation time from COVID, right? Like all the way down to 5 on this stock. It's up to 44.7. RSI super green right now. We're above all the moving averages. But we are getting extended on all the time frames right now. So this is a stock, not saying I would short it or anything, but as far as going long, you had a really good opportunity through December and early January and then it has just ran. Just the value stocks have been running lately. So there's ERX, and then I'll just take you guys back to the S&P 500 to wrap up this video. But basically, I'm curious to see, yeah, here's all the time frames with the little drawing right on them, just because I was showing the RSI and on the daily chart and TTM squeeze and everything. But I do like this setup as well. Now we are pretty much at key resistance and support on both sides. So even if the earnings are bad and we do react poorly and it does continue that way as far as like, you know, Facebook, I still think the market has enough relative strength here to where we can see stocks like Google keep their strength. We can see stocks like Amazon keep their strength. We can see stocks like Apple, which have been relatively strong as well. I can pull Apple up actually really quickly too. Apple's been really interesting because it had really good earnings, and here we are. I think Apple's going to push to new all-time highs eventually. I mean, we were pretty much on pace until we had the bad news come out about Facebook, right, with the earnings. But look at this. We're back to the green line. The RSI is at 61, back above the moving averages. I could see us chop for a couple more days and then make an attempt at this 183 level. We tried it back in the beginning of December. Then we tried it almost exactly a month later, and here we are. You know, a couple days from now will be another month later from these couple attempts to break all-time highs. So we definitely have this, you know, TTM squeeze working in our favor too. We're gonna get some really solid momentum, and then where do we go from there? You know, that's a really, really great question. But I do think Apple will continue to push up and pull the S&P 500 with it. So that's going to be everything for me in this video, but I hope this helped you guys out a little bit. And what I'm watching here, I'm currently neutral. I have a couple positions. You guys know I have my 44.90s on my put spreads, and then my 46.80s we have on the call side for February 7th. So I don't care if the market goes up or down here. I just don't want it to go too far down or too far up. I'm more neutral because we're at this key resistance level. And which now can act as support because we closed above it. But like I said, these earnings could shake us out a little bit. I still do think that the market has enough relative strength, though, to hang on and just continue to do what it's been doing. So personally, I'm not too worried right here. I'm curious to see where we open tomorrow, though, now that we have this reaction currently. But it does look like the S&P 500 is down about 0.6% after hours, after being up 1% on the day. So that's quite the move, right? That is quite the move down. We closed at 458-ish on SPY. Now we're down to 450, 450. So really curious to see where we go from here. But that's going to be everything for me in this video, guys. Make sure you leave a like, comment, a subscribe below if this does help you guys out for decision making. But these are just the time frames that I'm looking at. Like I said, I just like these setups, especially down here. The 195's got the mean at 46.80, and we usually chop in this range. So very rare. I don't expect us to absolutely break all-time highs very soon, but I do think we could do that in March and maybe earliest at the end of February. I just don't foresee that happening any sooner. But I do think we could get up to 4,800 again pretty soon. Just really good setups going here, a lot of momentum, and it now just comes down to, can we carry this through? We have the mean around 46.80, so I think we're going to close the week around 46.20, but like I said, it's really hard to tell now since the Facebook earnings came out. They were not very great, not great guidance, but that's the Zuckerberg way right now. I'm just kidding, but I'm curious to see what Facebook does. I'm curious to see how Tesla reacts to this, how Amazon does, and where we open in the morning. So that's going to be everything for me. I hope you guys have a great day, and I'll see you guys in the Discord tomorrow and then also in the rest of the markets.